Hey guys, you're welcome to my YouTube channel. This is Synthetic Goddess. If you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. So in this video, I want to quickly share with you what you need to look out for as liquidity, as a major liquidity. A lot of people don't even know what this major liquidity have. Now when we talk about major liquidity are liquidity that we're not expecting the market to reach. They are liquidity that are strong liquidity that we are not expecting the market to reach. Such that when market rates it, it is an automatic BMS for us. Now it depends on the time frame market rates this major liquidity. It depends on the time frame. You cannot go to 1 minute time frame and market rates major liquidity and then you're expecting the market to get to 4 hours time frame PO high. It is not possible. So you need to be very careful about your time frame. It is time frame that confuses a lot of traders. Okay, time frame confuses a lot of traders and they don't know how to align this time frame together. So when we talk about major liquidity are liquidity that we're not expecting the market to reach. They are structure. They are major structures that we're not expecting the market to reach at all. Now once the market rates it on a particular time frame, we are seeking another PO high. We are seeking another PO high that the market would likely use, or where the market is going to go take the next liquidity. As we all know, market moves from a particular liquidity to another. So if it takes the first liquidity, we are looking forward to the next liquidity the market wants to take. So you need to know what your major liquidity have. So that is why I am making this video. So stay tuned till the end so that you'll be able to grab everything I am going to say. Also, if you have any question, just drop it in the comment section, or you join our Telegram channel. You can join the Synthetic Community Telegram channel so that you'll be able to ask all your questions. I will link to the Telegram group. I'm going to link it in the description box so that you can join and then ask any question you want to ask. So ounce of liquidity is actually one of the types of major liquidity that we have, and it's the first one. So we have series of characteristics of major liquidity. But today I'm just going to be talking on ounce of liquidity and how you can recognize it. You know, a lot of people just mark anything as ounce of liquidity, not knowing what ounce of liquidity is basically. Now, what ounce of liquidity does is that it takes out trader that sells and it takes out traders that buys. So if you're buying, it will take you out. If you're selling, it takes them out. After taking them out, now it's going to move in the proper direction. Here, I gave an example of 2 ounce of liquidity, both for buys and for sell. Here I gave an example of buy ounce of liquidity and I gave an example of sell ounce of liquidity. So I'm going to be explaining it now. Now when market is approaching a particular PO high, maybe your higher time frame PO high. So let's take for instance your higher time frame PO high is here and the market is approaching it. Market's approaching your PO high on the higher time frame. What you are going to be looking out for is first a characteristics of major liquidity such that when market tests your PO high properly, you're not expecting the market to come back and reach that high again. So you need to know if the market has untied liquidity before breaking structure. We always have ounce of liquidity before a proper structure break. Please note that we have ounce of liquidity before a proper structure break. Now the market will deceive a lot of people with different break of structure, because this is a break of structure here which I am going to explain, and also I'm going to explain it on chart. So we have a break of structure there, but this is the proper break of structure. And then we have this ounce of liquidity before the proper break of structure. So you need to be able to discern what your proper break of structure is. Now, if you are moving close to the PO high, let's take for instance, this is the PO high over here. If you are moving close to the PO high, the market will do something like this. You don't expect market to just move impulsively to your PO high and just move impulsively away from it also, except for volatile instruments on synthetic indices. Except for volatile instruments, that is when you are you can say the market moved into PO high impulsively and moved out impulsively. There are cases like that, but if you carefully study what the market is doing, before market gets to PO high, you will see something like this. Markets will start dropping liquidity like this. Now, all of these are liquidity. They are not break of structure. The first thing the market will come back to do is come back, raid all of this liquidity, deceive people into it, thinking this is a break of structure. A lot of people will think this is able to do first. When moving to PO high, the market will start dropping liquidity like this. The market will start dropping liquidity. Now, if you get close to a PO high, the market will now do something like this. A lot of people will think this is a break of structure and then they should enter for a sell when market comes back here. When market comes back here, they are expecting to sell the market so that the market can go down. No, the markets won't do something like this. Markets will give you ounce of liquidity before breaking structure, before giving you a proper break of structure. Now, what are we expecting in cases like this? Since the market has given us a lot of liquidity for market to grab, after market grabbing this liquidity, the market will come back. It will take this high. Once the market takes this high, then we are expecting the market to start moving to the downside. Now, this is our proper break of structure. This is a proper break of structure. This happens oftentimes. I mean, if you study your charts, you are going to see this often. You are going to see this particular pattern often in the market. The market will definitely give you this major liquidity first to be broken, and it will come back to give you another major liquidity as ounce of liquidity. This is also a major liquidity that we are not expecting the market to break because it has characteristics of major liquidity. So when market owns this liquidity, this is our proper break of structure. We are not expecting the market to come back to this high to break it. Now, let me give a buy example. So let's take, for instance, we've been selling to the downside and then we want to change trend. The market will do something like this. Now, let's see for the buy ounce of liquidity. Let's take a look at the buy ounce of liquidity. Now let's take for instance we've been selling for a long time and then the market wants to reverse at a particular PO high on the higher time frame. If you check your lower time frame, you will see something like this: market dropping liquidity to grab. After market drops this liquidity, the market comes back to grab this liquidity, then come back again to take out this low, Now after this low is taken, this is what we call ounce of liquidity. This as unchecked liquidity. That is, if market comes back and then breaks structure to the upside, this is our ounce of liquidity. So what we are expecting is market to come back to a PO high here and continue to the upside and continue the movement to the upside. We are not expecting market to take this particular low. If the market is for a buy, you recognize your ounce of liquidity for a buy. Now, make sure that before you pick out your ounce of liquidity, this particular high, this particular move has taken liquidity inside that structure. Ensure that it has taken liquidity. A lot of people will mark this as ounce of liquidity. Check this out, guys. A lot of people will mark here as ounce of liquidity. Mark this as ounce of liquidity. Sorry, not that. That's actually ounce of liquidity. A lot of people will mark this ounce of liquidity, and the market has not taken this high. The market has neither taken this high nor taken the liquidity that is inside. And a lot of people will be assuming this is a proper liquidity. This is a proper ounce of liquidity. No, ounce of liquidity happens, or you can recognize ounce of liquidity after you must have had break of structure. After you must have had break of structure, that is when you can recognize if this is ounce of liquidity or not, and that is when you can anticipate to join either the buy or to join the sell as it moves. So we are going to be going to charts now, and I'm going to be showing you examples of ounce of liquidity and how it happens. So we are going to be going to charts, guys. Let's see at charts. Let's see what the market did as ounce of liquidity and how we can actually replicate it to our own trading life. Let's see, guys. All right, guys, so this is the chart, and this is volatility 101 Hz index on the 1 hour time frame. So we were talking on ounce of liquidity. Now this is a perfect example of ounce of liquidity. There was an ounce of liquidity here and the market could not break the high. So I'm going to explain what happened here. So this is 1 hour time frame. I'm going to narrow down to 15 minutes time frame. I will narrow down to the 15 minutes time frame. Now, this ounce of liquidity, ensure that it is following your structure. So you can see we are in a downtrend here. What you are expecting is ounce of liquidity at the upside. You are not expecting ounce of liquidity at the lows. You are expecting ounce of liquidity for highs. The highs you are not expecting the market to take. That is what you are expecting, not the lows you are not expecting the market to take. So you have to be careful that you know your structure properly. You know the structure of the market is moving on properly. So as you can see, this is a downtrend. This is a downtrend for us. So guys, let's see what happened here. This is a proper ounce of liquidity. When major moves are about to start, that is when you will see all of this, and I'm going to show you why markets could not really break them, why markets could not really break those areas. So we have this as ounce of liquidity. Also, I'm going to be marking this as ounce of liquidity, this area as ounce of liquidity, because it really happened properly here. Now see, guys, see what I was trying to explain. We were approaching a PO high, and market was giving this particular move. The market was giving this move. This is a move to the upside. We started dropping liquidity. There was a drop of liquidity. We started dropping liquidity, and these are the liquidity the market will definitely use. So a lot of people will count this as a break of structure. A lot of people will see this as a break of structure, this particular low. A lot of people will see it as a break of structure and expecting the market to come to this high to continue the downtrend. Now you can see that the market reacted at this area. But it could not use it, and the reaction is so that a lot of people can get in and then they are going to dump it on them. Okay, and so that they can take them out. It started reacting, it started giving wicks. Some people will say these wicks are confirming whatever, that it is confirming something. Also, there was a hunt of liquidity at this particular area. So I'm just going to be showing you guys. So as you can see, we dropped liquidity. There was a drop of liquidity here. After we dropped this liquidity, the market came back and raided all of this liquidity. After market raided the liquidity, the market came back and took out this high. To me, this was actually not a proper break of structure because we had an impulsive movement to the downside. Then the market started dropping liquidity. If you check the line chart, let's check the line chart so I can show you guys something. So you can see we had a break of structure to the upside. Market could not come back to give a proper test. It was giving a trend line liquidity. This was giving a trend line liquidity on this line chart. So if you don't know how to use the line chart, I dropped a video on how to use the line chart. You can check it out also. So I dropped a video on that. So now you can see, guys, the market took out this liquidity. After taking it out, it came back to break this high. So this is our proper hunt of liquidity. Now inside this hunt of liquidity, we had another hunt of liquidity. I'm going to show you that on the 15 minutes time frame. It happened on the 15 minutes time frame. Remember, I told you guys earlier that a lot of traders' problem is time frame. They don't really know how to use the time frame. Now see what the market did. We had a break of structure to the upside. there was a break of structure to the upside, the market started dropping liquidity. It takes someone that is really wise to recognize this liquidity. The market started dropping liquidity. The market came back to take out this same liquidity. You can see the market took out the liquidity. After it took it out, this was the POI the market used, because this place was untested. It was untested, and it was after we had that break the market started dropping liquidity. Now after we had that test, the market came up again to break this high. So this is our hunt of liquidity. If you check this on the 1 hour time frame, it is a perfect hunt of liquidity. But that was what happened on the 15 minutes time frame. You can see, guys, I'm going to show you that this is a proper hunt of liquidity, guys. This is a proper hunt of liquidity. Proper hunt of liquidity at this time frame. On this time frame, this is a proper hunt of liquidity. So you are not expecting market to take this particular high. You are not expecting the market to take this high. If the market takes this high, it simply means we have a change of character. It means we have a change of character. Now, despite the markets coming back inside, it could not break this high again because it has taken a whole lot of liquidity, and it showed exhaustion. It showed exhaustion, meaning the market is already exhausted. So we had this break of structure to the downside. After the markets broke structure to the downside, after we had this break of structure to the downside, this one, let me show you guys. After we had this break of structure to the downside, now we are expecting the market to give us an entry. We were expecting the market to give us an entry. If you guys have watched my video on secondary inducement and primary inducement, you will notice that this is our secondary inducement. This is our secondary inducement, and the secondary inducement did not test our POI properly. So we're expecting the market at this area. I think I took this trade some time back. I think I took this particular trade. So yes, the market came back to the POI. After the market got back to the POI, the market gave us something like that again. It gave us hunt of liquidity. If you check the 15 minutes time frame, let's just check the 15 minutes time frame. Okay, so guys, see what hunt of liquidity gave us on the 15 minutes time frame. The market came down to pick out liquidity. Oh, this would have better been shown on the 5 minutes time frame, guys. Let me show you guys on the 5 minutes time frame, because I am seeing wicks just up. Okay, see guys, see what I was trying to say. See this, we had a break of structure to the upside. Market started dropping liquidity. See the liquidity, market started dropping, and we could not test this area. So market used this area as liquidity. A whole lot of people will think this is actually an entry confirmation to enter for a sell to take this low. No, it is not, because we still have an untested area here. Now after the market tested this area, in fact the market gave us hunt of liquidity here also, because it took out this high, came back into this area, gave us hunt of liquidity. So if it breaks this low, this is a perfect low for us to break. So as I was saying, guys, so you can see, guys, we have this area. We have this area that took out all of this liquidity. Ensure that this low took out a lot of liquidity. After taking it out, it could not break this low. It could not break this low. So we had to come back and take this high. We had to come back and take this high to count it as hunt of liquidity. Even before markets took out this high, you can see we had same scenario here. The markets displayed same scenario here to give us hunt of liquidity. This is the 5 minutes hunt of liquidity, and this is the 1 hour hunt of liquidity that you can see. It is very, very obvious on the 1 hour time frame, but also on this 5 minutes time frame, it actually gave us it gave us another of its kind. Meaning immediately we had a break of this low, you know you are entering the market. That is if you are very familiar with what the market is doing. But if you don't really know what the market is doing, or you are a beginner, you don't really know about hunt of liquidity, this is a break of market structure for you. But for somebody that is very knowledgeable and can actually think of some things, this is a break of structure to continue to the downside, to take this low. This is your first take profit, because you know that when market breaks this low, until market breaks this low, it won't come back in depth, it won't come back deep into this area. You know that until we break this low, the market won't come back deep into this area. So your first target is this low. After the market has taken this low, your first target is this low. And you can see the market came back to an area like this, and then it tested it properly, an untested area. It could not come back to take this high. I think the market later came back. Let me check what the market did. Okay, beautiful. Yes, the market later came back. Let's see what the market did. Okay guys, the market did this. It entered properly, taking this high, and it took
out all of this. It sold massively. It sold really massively. So you really need to see what the market is doing. Don't just pick out anything as out of liquidity. You need to be sure that these things has grabbed liquidity very well. You need to understand the concept of liquidity, because that is what market does. Market seeks to take you out of the market and still move in your way. So you really need to be familiar with anything called liquidity. Anything called liquidity, in fact, you should run to it. Anything called liquidity, you should run to learn from it, so that you will be able to know everything about liquidity, because that is exactly what the market does. It seeks to take you out of the market, take your money. You know, liquidity is money. It seeks to take you out, take out your money, and then move in your direction. And at the end of the day, we have a lot of frustrated traders because of this. So you really have to be careful, guys. You really have to be careful, guys. So that's going to be all for now on Hunt of Liquidity, guys. I'm going to see you in the next video. Keep living in the atmosphere of profits. Have a lovely day, guys.